Today, Bitcoin and Ether fall to end the week. And Rebecca Rettig, Chief Legal Officer with Jito Labs, explains what happens next after the Senate Banking Committee's crypto market structure bill hearing was postponed this week. Welcome to CNBC's Crypto World. I'm Brandon Gomez. Major cryptocurrencies in the red to close out the week. The moves come as investors grappled with a slate of headlines out of Washington this week, running the gamut from heightened geopolitical risk in Iran and Greenland to worries over threats to the Fed's independence. As of noon Eastern, Bitcoin fell nearly 2% to under $95,000. Ether dropped more than 1.5%, and XRP traded around $2. Taking a look at the week, Bitcoin is up 5% as of noon, marking its third straight weekly gain for the first time since July, and its best week since November. Ether is 6.5% higher compared to the week before, marking the cryptocurrency's second weekly gain in the past three. XRP, however, is down 2% for the week, its first weekly loss in three. ARK Invest CEO and CIO Cathie Wood joined CNBC's Squawk Box this morning, where she shared her outlook for crypto.
I'll tell you what has happened to Bitcoin and all other crypto assets. There was a flash crash on October 10th, 10/10. And from what we understand, there were a lot of leveraged individuals, investors, others hurt. We think that it has washed out of the system. We actually think we have it on good sources that it has washed out of the system, that correction. It was about a $28 billion hit. We think we're on the other side of that. And so we're seeing the crypto asset ecosystem stabilize.
And taking a quick look at a crypto-focused stock, Riot shares soaring by more than 12% after the Bitcoin miner announced this morning that the company signed a data center lease and services agreement with leading chipmaker AMD. The move highlights Riot's shifting business plans as the firm joins other Bitcoin miners in focusing on the fast-growing demand for AI infrastructure. Okay, let's talk about the top stories. People in Iran are increasingly withdrawing Bitcoin from exchanges amid political unrest in the region. That's according to Chainalysis, which in a report out yesterday said Iranians have significantly ramped up withdrawals of Bitcoin to personal wallets during the recent mass protests, possibly as a flight to safety amid currency collapse and political instability. The unrest, sparked by dire economic conditions, has posed the biggest internal challenge to Iran's ruler for at least 3 years, and has come at a time of intensifying international pressure after Israeli and U.S. strikes last year. Chainalysis also noted that Iran's crypto ecosystem reached nearly $8 billion in 2025, having grown at a faster pace than the year before. The blockchain analytics company went on to note that Iranian cryptocurrency activity is correlated to political events and conflict at home and abroad. Last, Galaxy Digital CEO Mike Novogratz believes there will be progress on a crypto market structure bill in the coming weeks. Novogratz joined CNBC's Squawk Box this morning to weigh in on the derailed crypto market structure hearing in the Senate. A major point of contention between the traditional banking and crypto sectors is the issue of stablecoin rewards, which Novogratz says poses a threat to banks.
One of the reasons the bill is stalled is the banks are saying, oh my goodness. If you go to JP Morgan right now, or Bank of America, or any of the big banks, you put money in a savings account, you get about 11 basis points, or 1 basis point. So the banks are making a tremendous amount of money, holding our savings, and depositing at the Fed at 3.5%, 4%. They worry that stable coins could have deposit flight.
We told you yesterday that the issue of stablecoin rewards was one reason Coinbase CEO Brian Armstrong said he couldn't support the bill. He also pointed to a reduced role for the CFTC in overseeing crypto regulation. Chairman of the Senate Banking Committee, Senator Tim Scott, said negotiations continue. Right now, no word on a new date for a potential hearing on the committee's crypto market structure bill, but Senator Cynthia Lummis, chair of the Senate Banking Subcommittee on Digital Assets, told CNBC it could take a couple of months. All right, sticking with the delay of the Senate Banking Committee's hearing on crypto market structure for our main story, Crypto World's Talia Kaplan spoke with Rebecca Rettig, Chief Legal Officer at Jito Labs, about what this means for the potential to see a federal framework for crypto in the U.S. in the near future. Rettig, who has been involved in discussions with lawmakers on Capitol Hill, also unpacks what she thinks of the text of the bill.
A markup on the Senate Banking Committee's long-awaited crypto market structure bill was slated to take place, and then it was postponed due to the issues the crypto industry had with the text. What do you make of this turn of events? Did you see it coming?
Everything in Washington, D.C. looks like it's not going to happen until it actually does. I don't think this is the first time that there's been this type of turn of events. And I think that there's been a lot of work put in by the crypto industry and by the lawmakers for many years with doing many drafts of crypto legislation. But this is the first time TradFi has really come in. And they didn't even really come in during the House process with clarity. They really perked up once the Senate looked like they were serious about moving something forward. So not having sort of consensus around the text right at the time of the markup may not be so surprising. And I think lawmakers have made clear they want to stay at the table. So let's see what happens next.
Now, the nearly 300-page bill was released earlier this week, and the Senate Banking Committee's text includes sweeping provisions for stablecoins, DeFi protocols, and tokenized stocks, just to name a few. You have been in the room for some of the negotiations, and you also serve on the CFTC's Digital Asset Market Subcommittee. So I'm curious for your take on what you think about the text. Are you pleased with the bill overall, or do you think it needs some major work?
No bill is perfect. And I think we can't overlook the deep work that went on by both Senate members and Senate staffers, including when so much is going on in the world, both on the financial side of things, but also just more broadly what Washington is focused on right now. I was in DC last week and certain senators said, I can't do the meeting on crypto because I'm meeting on Venezuela or something like that. So I think that's important to keep in mind how far crypto has come and how much attention has been on this. I do think that there are meaningful changes that need to and can happen between now and when a bill may come back to the floor with a markup. But I also think everybody is committed to doing that. We also saw many amendments come through. And so this really gives time to look through those amendments, to refine the language and the text even further, to work towards some compromises and to get broader support around a draft that comes out.
As I mentioned, you have spent a lot of time in DC. You said you were there last week. You were speaking with lawmakers about crypto, providing insight and participating in negotiations for crypto market structure legislation. Do you feel like some of your input was included in the text of the bill? Do you think your advice resonated with lawmakers?
It's a great question. I hope so. I've been doing this for a very long time and usually quietly behind the scenes. I'm not a big social media person and talking about my conversations and things like that. But I think everybody in industry actually feels that they get to have meaningful input. I'm not sure there's any industry that gets to really get into the text in the same way that the crypto industry has gotten into the text over these 5-6 years where we've been working on this. So it's a pretty rewarding process to actually be able to see concepts and ideas come to life that you worked on for many years. So I think it is actually a real privilege that much of crypto gets to be in the room when these bills are getting written.
Well, what's your take on the stablecoin rewards debate between the banking industry and crypto executives? Coinbase CEO Brian Armstrong said this topic is one reason why he can't support the bill in its current form. As you know, the crypto company has been fighting against banks, which have been urging Congress to close what they deemed a loophole in the Genius Act that allowed intermediaries to pay interest on stablecoins. So what do you think about the showdown between banks and the digital asset industry over stablecoin rewards? And do you think the text of the legislation handles the topic fairly?
I think that concerns over stablecoin rewards actually may be overblown. And I'm not sure that I actually think holding stablecoins and being able to pay rewards is going to meaningfully affect the use of or the way the makeup of bank deposits, especially for community banks. I'd be surprised if I'm from a small Midwestern town, people are going to default to stablecoins with yield on Coinbase versus their community bank, which even my parents still go to. So, that will be interesting to see how we can reach a fair compromise on that. And I'm not sure because the banks really do believe that this presents a threat to their business model long term. I'm not as much in the stablecoin game, so I don't want to weigh in on where everybody's going to net out, especially for people like Coinbase or others who certainly have a longer business stake in this. But I really hope we can come to agreement on this issue in some way, shape, or form.
Focusing on DeFi, the bill directs the SEC and Treasury to create specific rules that clarify how a person or group who control a DeFi trading protocol complies with regulatory requirements, things like disclosure, record keeping, and securities laws. What do you think about how the bill tackles the topic of DeFi, specifically from a legal perspective? What is in the bill as it relates to DeFi developer protections?
Great question. Developer protections are the most important, or one of the most important things to me. Of course, it's something I've been working on for a very long time, including on DeFi. I will say this bill is a first of its kind anywhere in the world on DeFi. Every single other country to tackle DeFi has either done a study or said we'll address this at another point in time. And so that the US would actually have a regime where rules are being written about DeFi protocols and where guidance is being given on how financial institutions can interact with DeFi protocols is a pretty big concession. And I'm not sure that maybe people who are questioning the bill on the lawmaker side really understand how far this bill goes. I think that in this time, where we're looking at the draft text, we need to work on some changes to certain provisions in Title III. That's what you're talking about and where most of the DeFi provisions are. So we can ensure that permissionless DeFi can continue to exist and be built in the United States, and that we don't put questions around how Treasury or other agencies may restrict usage of DeFi, and we can really put narrowly tailored risk-based mechanisms in place instead.
So overall, what would you like to see change before this crypto market structure bill is up for a hearing again in what seems like could happen in a couple of months, according to what Senator Cynthia Lummis told CNBC?
I think that people have been pretty specific about what they want changed. And to have a draft bill that everybody can meaningfully engage with, there's some very narrow things in Title I, which is about selling tokens, that there can be changes made over. We've sort of talked at a high level about what needs to be changed in Title III. And I think that Coinbase and others have been very clear about what they want to see in 404, which is the yield provision, and in 505, which is the tokenization provision. So if we can really do some good work around those narrow concepts, and hopefully get to, as I said, a broad scale, meaningful set of support, not just from industry, but also from lawmakers.
Well, it's certainly evident that you are heavily involved in this legislation. What happens next, though, as it relates to crypto regulation? Do you think pushback from Democrats could potentially prevent the U.S. from seeing a market structure bill become law before the midterms? What do you think will happen?
You know, I would say with the markup called off, we're in a little bit of a hangover period where people are recovering. Everybody, was losing sleep over reading the bill, getting some meaningful edits in, working on amendments and the like. So people are recovering, the equivalent of drinking some water, I guess. I think we'll see. We really have to see what happens. As I said, I think industry is committed to coming back to the table, and it sounds like certain lawmakers are too. And I hope that we can really do that in a meaningful way, and that TradFi knows that having market structure legislation actually would be good for them as well, and so that they can come as constructive and give constructive feedback as well.
Okay, one more thing before we go. For the last 4 years, Crypto World has published a new show every weekday, bringing you the latest headlines and conversations with the biggest names in the industry. But starting next week, we will be trying something new. Crypto World will publish on Wednesdays. Beginning January 21st, each weekly episode will still cover market-moving headlines and exclusive conversations, but we will also bring you a longer-term view on crypto prices. So with that said, we'll be back next Wednesday, and we hope to see you then.